Hey guys, good afternoon. It's Tony. I got some people asking about Twitter and if we can, if you can essentially use this as a breakout. Use it for the breakout strategy, and you actually can use this as a breakout strategy. Um, I guess I already had TA on this daily bounce up. Okay, cool. But I also had it forecasted down to like $55 or whatever. I guess because I was in the weekly. I can easily see that on the weekly. Yeah, probably because of this. Last move down from here to probably, yeah, that's probably why I have that forecast for down there. But I guess short term I already have this going on for, there we go. So the breakout strategy, I haven't really done the breakout strategy in a couple of weeks because I put a big position in BITF, which is Bitfarms. And it was mostly a big hedge against crypto going down. As you guys know, I actually thought that Bitcoin was actually going to drop heavy, and it did. I sold calls on Bitfarm all the way at the top, still holding that. I picked up a couple of $1,000, like $5,000 or something. So nothing too crazy. But somebody asked me about, and that's the reason why I haven't been doing the breakout strategy, because I'm not liquid right now. I'm not liquid. I don't want to waste the $5,000 or like the extra money that I think I have, maybe like 10K buying power right now, and I'm just kind of waiting it out. I just want to see what happens with the market. It's too risky right now, and I want to make sure that I'm liquid heavy in case there's a big drop in either direction right now. But as far as Twitter goes, I do. Twitter is kind of it did break to the upside for the breakout strategy. Let's see if I can do this. So I mean, what you can basically do. It's not too much of a break to the upside though. I mean, right now on the weekly, I can definitely see it running back to like $69. But you're at $67 though, so you don't really have too much of a leeway to the upside. I mean, you would have what, from 67 here to almost $70. I mean, it's not a big run up, right? Like, if you were to buy a call or a shares, whatever, it's 4%. It's a 4% rise. I mean, I think there's a really good chance that you see $70, $72 in the coming weeks for Twitter, especially because you actually closed, a full candle above previous resistance at $66. And I guess I already made a TA on this back in September 7th, basically calling this out, I guess. But I do think that Twitter is doing a reversal. I think we are headed to $72. I don't know if I would use the breakout strategy for this. Just because you have a really small, I mean, you do have up here to down here, right? But when you actually add it in, it's not, there's not much upside really. I mean, what's the upside here? Like I said, yeah, the upside is like $70. So where you're at 63, I guess you can use the breakout strategy here. I would probably wait it out to actually use the breakout strategy for something more like, let me show you guys. So the way that I would probably use the strategy is you have a clear mountain peak on the high side and the low side, right? So right now you have clear bottom right here, and then you have a clear top, and then you have the reversal to the downside right here. So here, let me see. Pretty clear bottom right there. Pretty clear top, relative high right there. And then you have your your actual retrace to the bottom side. So that's an actual retrace, right? The same thing that you would do for right here. So, clear bottom, clear relative high, bottom, and then if you would have actually had price break a weekly candle above this relative high of $80, then you could have done it to the upside. But right now you could do it, play it to $70. I think it might be too risky. I do think, I do think that Twitter is headed to the high side. I do think I'll tell you guys that right now. It does look like it's going to be running again to the high side. I can definitely see us going back up to what? Like another $17 move to the high side. We close the candle down here. Where's the wick? $17 in what? 56 days? Like right here. 17, 19. Right there. So, another 60 days, I can definitely see another $78.45. And this is just based off of a regular momentum movement, right? Because we do have the reverse MACD officially. We officially closed a bullish week. On the daily, you close the candle above 66.19, 66.20, which is major resistance. And then you also have the stochastic creating clear bottoms where you have the blue line crossing over the red one, which is, well, they're essentially just MAs, right? But again, this would be my forecast longer term. Shorter term, if you want to do the breakout from lows of, August 16th, the week of, to August 30th, the week of, you can maybe expect the $70 to $70, but that's only about a 4% move. If anything, I'd probably play it out from here to previous highs of like $78, $77. I think that would be my major forecast. I mean, I already had it forecasted for, $72. Back here, a retouch of previous support, and then a bump up to $72. And I do think, like I said, we're headed that way. But if I were to do the actual breakout strategy, I would only do it when we break above, it's like $73, which is the previous relative high in this section, right? And then from there, you have a major resistance at previous highs of $80. But if you were to actually do the breakout strategy, I would more so recommend, doing it from actual relative high to relative low. So something like this, watch. So we'll have it from these relative highs of July 19th down to relative lows of, May 10th. We'll put it to the right side to make sure that everything is all good and dandy. And again, once you actually break this relative high, we can definitely see an $88, an $88 Twitter from that break of previous relative highs right there. I can definitely see the run up right there. And the monthly looks, I mean, for September, I'm pretty sure it's going to close like a weekend bear. So this would be kind of a good move. And then on the weekly, like I said, you officially had a close on, what is it called? You officially had a close on the weekly for a bullish cycle. And you're creating clear bottoms. Do you have any support right here? Let me see. Yeah, and you have support on the stochastic or on the same level too. I mean, it's around there too. So yeah, I mean, I definitely say up. I definitely see, $72 happening pretty easily, which is previous resistance. I can definitely see us going to $72 maybe this week, and possibly $88, 60 days out. So about in 2 months or so. So Twitter, definitely think it's going up. I would not think that Twitter is going to be going down. I mean, if anything, you can see a trade between this range for a bit, but I think overall, we are going to be seeing a new high, or not new high, but at least back to relative highs on Twitter. So, probably $72, and then again, somewhere in the range of like $78, maybe in the next 2 months. This would be an easy buy for me, at least, at least right now. Because if we do go back to $78, that's what? That's a rise of what? 16%, 20%. This is an easy swing. This is an easy swing. I don't care if it would last a month or 2 or 3 months. I would easily take this trade every single time. I would be buying shares immediately Monday open, and I would just ride it out until it hits $78, because I think we're headed that way. And a 20% move to the high side is generally pretty good, especially because you keep consistently seeing it jump up. You see it touch on the 50 MA. And then you're essentially seeing it, move to the high side. But I mean, if you wanted to double test it to see if there's any divergence, indicators, RSI. Do we have any divergence? Low, high, low. So you actually don't have any divergence. But still, this is still like a really, really good setup to play on the high side. So again, touching the 50 MA, touching support, bounced off, weekly official close, stochastic created bottoms. Yeah, and then, like I said, I'd easily guess that you're headed somewhere in the range of like, previous relative highs of like $78. Like that just looks like what's going to happen. So lows, highs, like $18.44 in 56 days, like around there. You don't have to get it perfectly, but lows, 56 days, $18 and 44 cents. Look at that. 44 cents. Look at that. It's almost perfectly on previous resistance of 70 or whatever. So yeah, if I had to take a wild guess, I'd say Twitter's probably headed back to like 78.45 around this range right here, somewhere around this range. I wouldn't be surprised if you see that at all. But yeah, Twitter all-time highs, definitely breaking to the high side somewhere, somewhere right there is probably what's going to be the trading range after the weekly closes, after we finish this bullish cycle, right? But again, if you want to play the breakout strategy, I wouldn't try it unless you actually break relative highs of like 73.36, which would be right here in this area. So all in all, Twitter just looks like it's going to go up. Breakout strategy, probably not yet. Again, use lows of May 10th, highs of July 19th, and then get your forecast and do the breakout strategy from there. But as of right now, Twitter still looks like it's going up. I would easily take this swing trade to $78 every single time. I would do this every single time. This looks like a perfect swing trade that I would take all day. So I'll see you guys later. Have a good day. Bye-bye.